Everything good?
Yeah.
Market's good?
We've had such a strong seller's market for so long. I feel like sellers are still wanting it to be a strong seller's market.
Mm-hmm.
Buyers are realizing they've got some more pull. I feel like we're in a season of transition.
Yeah. I definitely feel like buyers feel like they can ask for the world.
Mm-hmm.
And sellers don't necessarily want to give it all up right now. So, but I do think, if you're a buyer in the market right now, you're getting great terms. Mm-hmm. We're seeing more concessions. The sellers are willing to pay for your closing costs, your, rate buy down, to use money, kind of doing it that way. So I think, overall you're getting great terms, and I don't know how long that will last with rates coming down. As more people enter the market, I think you're going to see, sellers hold back a little bit more, especially if you have multiple offers on homes.
It is the best time to buy a home as a buyer that I've seen in years. Like throughout the COVID years, we had such a strong seller's market. And I'm with you. Like right now, I'm seeing buyers get a termite letter, and not just a termite letter, but a full year of termite coverage. Mm-hmm. And sellers paid closing costs.
Yeah.
And we didn't see any sellers concessions.
No.
For years.
In fact, it was like, if the house was listed at X, you were going to pay $50,000 more to win the offer.
Yes.
It was just nuts, and it was really unhealthy, is what it was, because, 10 offers on a house, it goes for $100,000 higher than what it was listed for. That's just, I don't know, and there just weren't enough houses on the market, so it was tons of demand, not very much supply.
For a long time, the list price was the starting point, and that was hard for buyers. Like if you get 8 offers, a couple of them are at list price. Like people think it's a good offer at list price during that, and it unfortunately was the starting point. But right now, we're seeing the list price. I'm seeing offers come in a little bit under list price, which I hate for my sellers.
Yeah, but if you're trying to get the house sold, and they don't want to be in it, or they're moving on to other things, it's like, okay, well, you have to price it the right way, or it's just going to sit on the market.
People are either going to come look at it and decide this is a great house compared to everything else, or they're going to come look at it and say, oh, that house down the street is a great deal compared to this. So if we're not priced right, like the list price is really a strategy to either sell your house or sell the neighbor's house.
Yeah, for sure.
So JD, how did you get into being a lender?
Oh man, that was wild. So I was actually a real estate agent, and I was like, it wasn't what I really enjoyed. So I was like, So I played in a golf league on Thursdays there was appraisers, lenders, realtors, builders, all kinds of industry people. And a buddy of mine was a lender, and he asked me if I wanted to come and start in the mortgage business, and I was like, all right, cool. And this was 2006. So when I got into it, I was like, man, this is really easy. And then the market crashed, and I was like, oh my gosh. But I had like really good dark hair back then. Now it's like super gray, but it's awesome. I love it. I love being able to help families out, put some good strategies together to help them be able to afford a house, or just how we structure the deal. So I love it. It's super fun. There's really nothing else I'd want to do.
How long were you a realtor?
6 months.
For real?
Yeah, I think I was just like, I can't.
That's funny. I never knew that. That's funny.
Yeah. So I just came to the other side.
Yeah.
Maybe the dark side.
I was gonna say, is that the good side or the dark side?
I don't know. It could be either. How did you get into the business as a real estate agent?
So my dad was a realtor growing up, so I never wanted to do it. And then I went to my freshman year at UGA. I really didn't know what I wanted to do. I came home that summer, and he said he would pay for me to get my real estate license. So I had nothing else going on, sure. So I went to Barney Fletcher, which is a real estate school, and it was like a 3-week course. And so I got a 3-week course, and then I went to real estate offices and just said, hey, I'm home for another month of summer. Do you need any help? And Lynn Larson at the Keller Williams on Roswell Road offered me to just do work in the office, and it was such a good opportunity. I mean, I was just like filing. At the time, there was a fax machine, so I'd get faxes off the fax machine, call the realtor, let them know they had a fax, put it in their mailbox. Like, it was just a good way to get in the office and be around where the real estate was happening. And that's when I really started to love it, just getting to see the action.
Yeah, no, it's fun. It's a great, I don't know, it's just satisfying, because what I find out is most people don't know the first thing about buying a home, and they don't know how mortgages work. And, because it's not something that you do that often. And if you bought a house 10 years ago, lots of things have changed. And so I like it from the teaching aspect of showing people like, this is how you do it. It's not complicated. I think some lenders make it more complicated than it needs to be. It's not brain surgery. It's just, taking the time to have an upfront conversation and say, okay, this is where you start, this is how you do it, and really try to make it easy. The easy button is what we want. So,
Yes.
Yeah.
Yes. I love that too, just making it easy.
Making it easy.
So I hear all the time, and I see articles and stuff on social media about what upgrades or updates to your house are the ones that really make a difference. Because, a lot of people will say, okay, well, maybe I'm getting my house ready to sell. I don't want to do anything, or I want to do too much. So, like, bang for the buck, like, what's probably your top 3 updates, upgrades that sellers should do before putting their house on the market?
That's a fantastic question. Almost everybody needs a paint job. Even like if you've lived in your house for any length of time, the colors that are in change. So updating that paint color really will pull your house into 2025, make it feel updated. And then that also covers scratches, nicks on the wall, whatever. An updated paint job really makes a house feel fresh. Fresh carpet makes such a difference. If my people can't afford that, cleaning it is usually a good step, but the fresh carpet just really makes a house. So paint and carpet, and then some staging. The staging makes such a difference. I hire a stager to come in and do a consultation with all of my sellers, and that is like where to put furniture so that your home feels the biggest, but then also it's going ahead and getting rid of stuff.
Yeah.
Either taking it to Goodwill or just putting it in the garage. The garage is a great place to put things. The staging is so important.
Yeah, declutter.
Yes.
Throw out your high school trophies. Nobody needs them anymore.
Yes. Yes. We want your home to feel like it has space. A lot of people want to move because they need more space, but we want your home to feel like it has space so the buyers feel like if they move there, they're not going to be cramped right away. So going ahead and getting rid of stuff.
Yeah, for sure.
Makes such a difference.
Awesome.
So, JD, what are you seeing happen with rates right now?
Oh, rates have been good. They're, off the highs of 7% or over 7%. So really, they've kind of settled in the mid to low 6% range, depending on credit, depending on your credit score, what type of program you're doing. But overall, the trend has been good. So, the Fed looks like they're going to cut this month, which doesn't necessarily, they're not cutting mortgage rates, but rates tend to follow that. And usually the market gets ahead of the Fed. And so where rates are right now, they've priced in the Fed rate cut. And really, to continue to see rates move lower, I would keep an eye on the labor market, as that if that starts to soften more, where job creations are becoming less and less, jobless claims are higher, people are unemployed, that is going to probably have the biggest impact on mortgage rates and whether they move lower. The Fed has to watch 2 things: the employment and inflation. And right now, their emphasis on the labor market is a little bit higher than it is on inflation. So rates are good. It's a great time to buy. If you're in the market to do that, obviously it has to make sense and be the right situation for your family. But we're seeing a lot of people refinance. So the people that bought the past couple of years that had rates, 7.5%, they're taking advantage of the lower rates and getting a lower payment on their property right now.
I think it's the best time to buy that we've had in years, because sellers are offering concessions, and then the rates are as good as they've been in a really long time. I feel like it's the moment you've been waiting for. It's the best time to buy that there has been.
And you can, with the sellers giving those concessions, you can use that money to buy your rate down. And so I have some buyers that are choosing to do that, and they're getting their rates into the 5% range. And so it's really what I would do if I was buying a house right now, is I would talk to a lender. You can call me, and really go over that strategy. Is that, okay, here's where my rate would be today. If I can get the seller to offer some concessions or money for a buy down, what does that look like and where can I get my interest rate to? And so you really want to have that information before you go out and start looking at homes, so you can say, okay, I put a plan together for the mortgage. I know kind of where my payment's going to be, and now I can go out and look at homes.
Have you had anybody get in the 5s, JD?
Yeah.
Wow.
Yeah.
That's amazing.
Yeah. And it's important too, and I think Mary would back me up on this, is that if you're going to buy a home, your first step should be talk to a lender, because the last thing you want to do is go look at, let's say, a $700,000 house, but you can only afford, or you only want to be around a payment of a $550,000 house or $500,000 house, and now you've looked kind of out of your price range, and in comparison, what you get for $700 and $550, it's a lot different. So you want to know your numbers before you go out. You want to have that conversation so you're not surprised after you've already started looking at homes.
The talking to the lender is so important before we start looking at homes, because when I have somebody that's like gone to open houses for $1 million homes and then they start looking at homes with me for 800, they're disappointed. Like, the homes are smaller, the location's a little bit further out. It's hard to go from like $1 million to 800. It's way more fun to, like, if somebody tells me they were looking at 800 and from talking to the lender, they can actually do up to $1 million. Like, going from smaller to bigger, it's like, oh, this is so big, like, that's so fun. The other way is hard. I mean, whatever will take you where you're at, but if I have my preference, I love to have somebody talk to a lender, and then we know where you're at and for what you want to spend. They'll almost always loan you more than you want, but what payment are you comfortable with? That's kind of how we back into your purchase price. Where do you want your payment? How much down payment do you want to do? And using that, we back into your purchase price, your payment.
I think people get nervous to call a lender and talk to them. It's like, I don't want to do that. So, and the thing is, like, you don't have to, if you're, let's say, 6 months out or a year away, it doesn't have to be a full, like, we're doing an application, we're pulling your credit. I can give you kind of some guidance on, okay, if this is your situation, this is probably what you're looking at, price range wise, payment wise, and what your cost would be. So, it doesn't have to be a full, application approval. Now, if you're going out to start looking at homes, you'd want to have that. But, I have plenty of people that call me and say, hey, our lease is up in a year. We want to buy something when that's over. Can we start a conversation on what does it look like to buy a house, and what mortgage payment and your rate and all that would look like? So we can certainly do that from the front end.
This is one place JD and I kind of in a friendly way disagree. I heard him say for the best place was to start with him. I would say best place is to start with me. I do a buyer orientation where we talk about the entire process. And after I do those orientations, I usually connect people to JD, like send an email to connect them. So that's my favorite place, is for people to start with me.
Start with Mary.
Start with me.
I can respect you wanting people to start with you.
You should do both, I think.
Yes.
Do both. Like,
Yes.
it'll get you'll be more prepared when you go out in the market,
Yes.
and things will be easier for you, for sure.
You should do both, I think.
Yes.
Do both. Like,
Yes.
it'll get you'll be more prepared when you go out in the market,
Yes.
and things will be easier for you, for sure.
When we've prepared, then when we go look at homes, like, if we find one you like, you can have it. If we look at homes before we're prepared, then it's like, I really like it, and they might be getting an offer from somebody else, but we can't make the offer until you talk to the lender. It's more stressful. If we do the steps in order and get prepared, then it's just fun. And if you want it, we can put our best foot forward with a great offer and a lender letter. And if you want it, we've got a good chance of you getting it.
Love it.
Yeah.
Easy peasy.
Let's tell some stories, JD.
All right.
Give me the craziest client you've ever worked with.
Gosh, I don't know, man. There's been a few, and I will say, I think for whatever reason, when someone is buying a house, there's so much stress involved, and so a lot of times, just your clarity is sometimes not always there on some things. But I've had a couple. Like, I had a guy that, we did the consultation. I was like, how much do you want to put down? He said $50,000. And I'm like, awesome. And so he does the application. He sends me his bank statements, and there's not $50,000 to be found. Like, there's nothing in his bank account. And so I call him and I go, hey, you said you were putting $50,000 down. You said it was in your bank. I don't see it on the statement. So do you have like a different account? He goes, no. It's in the safety deposit box. It's $50,000 in cash.
Whoa.
Yeah. I'm like, okay, first off, just so you know, cash, can't use it. like it has to come from an account. So the underwriters want to see where the money's coming from. And if you have $50,000 in cash, nobody knows where that came from, so you can't use it. But I was like, who keeps $50,000 in like a safety deposit box?
Literally in the bank.
Literally in the bank.
One of my favorite stories, JD, somebody we got to work with together. Let's call her Nancy. Nancy was under contract to buy a home, and this must have been a year or two ago. We were about to close at the time the property tax bills came out. And for this couple, sometimes I have couples put a house in one name, but just like it makes it easier sometimes. So this house, they were married, but we were putting it in just one person's name. And when you put a house just in one person's name, the numbers are always tighter because you're usually maxing out that person's debt to income ratio because you don't have you can't count the two. So tax bill came out, and the new tax bill pushed her over what Nancy could qualify for.
Yeah.
So what did we do?
Oh, yeah. We had to do some finagling on the rate and get it brought down a little bit.
Yes.
And I think we put a little bit more money down. So fortunately, that one worked out.
It did. The house had appraised for more than the purchase price, so we were able to basically raise the purchase price, have the seller pay more closing costs, and use that extra closing cost to buy down the rate.
Yeah.
You pulled a rabbit out of a hat
That was fun.
with that one.
That was fun.
It was fun. I love that. Like making it happen.
Yeah, making it happen.
Do you remember the first person you ever did a loan for?
No, it was wild. My very first loan that I did was, and I didn't you go through training and you go through all your classes and you do all the things, but when you get that first one, it's kind of like now it's real and you're trying to figure out exactly how all that works. So my very first loan was someone doing a construction loan.
Oh.
And I was like, I have no idea.
Because those are more complicated.
They're super complicated, and there's a lot more to it. And so that was a bit stressful, but yeah. So it was just a construction loan, and I'm like, why couldn't this just be like we didn't even talk about this? But we figured it out. We got them closed. It was fine.
I wish it had been like a 20% down, perfect credit,
Mhm.
easy one.
Yeah.
For your first
Yeah.
loan. For your first
Yeah.
loan.
How about you? Do you remember your first?
Oh my goodness. Yes. So I had been working for a builder, which I loved, except my friends were buying houses and I couldn't help them because all I could sell was what the builder was building. So I decided to leave that. And then I put on Facebook that I was a realtor, and I'll never forget, a friend of mine's sister sent me a message and said she was moving back to Atlanta and she saw I was a realtor. Could I help her? And I was living with my parents at the time because I had no money. And I remember going to look at my mom and I was just like, she thinks I'm a realtor. And my mom was like, well, you are. God bless Mom, believing in me. Thank you, Mom. But yeah, so I fumbled my way through that one. Thank goodness it was, friend, and so we got our house, and she's still in that house.
That's a long time.
Yeah.
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 That's cool.
Yeah.
I'm trying to think, like, stuff's just sometimes crazy. I think the craziest time was right after the market crash because, credit was tight. Underwriters and lenders and banks weren't real keen on lending a ton of money out. And so you had to be super, super qualified. But, at the time, like once that happened, like in Atlanta and around, like you could buy homes for like $80,000. Wow. Like it was crazy.
Oh my goodness.
It was just nuts. And it was crazy. It was wild because there was a ton of people, that couldn't get a house, and a ton of people having to go through foreclosures and things like that, which was terrible. But it was also a time where you had all these people buy, like, can you imagine like right now being able to buy like a 100,000? I mean, and that just shows you that from 2007 or 8, like how much the market has come back, and that real estate has appreciated, and I think Atlanta is a great market because there's so many different industries, and it's not just propped up by one major corporation or anything like that. You have a lot of businesses that are based out of Atlanta, and so you tend to not get the super high swings in appreciation, but you don't get the super low ones either. It's just kind of a steady appreciation on homes. But yeah, 80,000.
That's amazing. Talking about the appreciation, I recently read an article that the Atlanta market crashed in 2008. Through that whole era, the appreciation we've had since COVID gets us on a pretty straight trajectory from where we would have been if the market hadn't crashed. So it's like, yes, we had 20% appreciation for a couple of years, but that was really just catching us up from the years where the appreciation was negative during that crash that started like in '08. So that was interesting. But it's like it still got us on a pretty good trajectory. You would think it would be like, but it's really still just a pretty good plane.
It's good.
Yeah.
It's been good.
Yeah.
It's wild. I had the first house we bought was in East Cobb, and bought it for like $155,000 or something like that. And we sold it. We bought it in 2004, so we bought it. And then it was worth less than what we bought it for. And then it came back. We sold it for more than that, for more than we bought it for, obviously. But what's crazy is I just saw it on the market like last week, and it's listed for $530,000. I should have just kept it.
Yes.
I mean,
Yes.
I look back, I was like, man, that's crazy.
Well, same first house that I bought. I bought it 2007, May of 2007, which ended up being the month that things peaked. Like after that month, things started to go down. And then when I didn't want to live there anymore, I rented it for about 7 years. And then, well, maybe not 7 years, but I rented it for a while. And then 2014, I sold it and I lost money on it. I sold it for less than I had paid. But same thing, I recently looked up what it was worth, like well over 300. Same thing, I wish I had just kept it.
Yeah.
But at the same time, for my life, having that extra property would have been hard over the past 10, 11 years. So for my life, it made sense. But
I know.
hindsight being 2020.
Hindsight.
Yeah. Okay, so JD, let me ask you a question. Like when I'm talking to sellers, what can I tell them about how to feel confident that the buyer is actually going to be able to get a loan?
Yeah, that's important. And again, it goes back to starting the process with a lender, getting pre-approved or approved, depending on what stage you're in. But because here's what's going to happen. If Mary takes a buyer to a house and they make an offer, the listing agent calls me. And the listing agent asks me questions about the buyer. And we're not giving anything personal out. We can't tell them your, personal information. But what they are going to ask is, have you reviewed their documents? Have you turned in your pay stubs, your bank statements, your W-2s, your tax returns? They want to get a sense that, okay, has this person provided the lender everything they need to be able to make a decision on a loan, or have they not? And some of it is reputation as well. Like there's a lot of banks and lenders that unfortunately don't have a good reputation. Like if a listing agent gets a letter from them, right, they're like, no, it's like we're not going to deal with that. Because again, it's not complicated to get a mortgage, but there are a lot of lenders and banks that make it more complicated than it needs to be. And so all we want to do when you are putting an offer in on a home, we want to make sure that we've reviewed all your documents. You've done your application. We've looked at your credit, just to make sure you're in great shape. And then from that point on, it'll be an easy process. So you do a lot of the work up front, right? And it makes the process so much more easier for you.
I love that because I do that too to protect my sellers. When we get an offer, I always call the lender, and same thing. I don't want to just know that they filled out the application and put in how much they make. I want to know, have you reviewed their pay stubs? Have you reviewed their bank statements? Because I don't want to get 21 days, 3 weeks down the line and to find out, you fudged a little bit on how much you make, and that means you can't qualify. Like that's a nightmare for a lot of people. That's a lot of time wasted. So yeah. I think that phone call is super important.
What are you seeing with home prices right now? Days on market? Is it going up, down? Like what are you seeing on that?
This fall, I'm seeing days on market be longer than it has been, and I'm seeing prices go down a little bit, and I hate it for my sellers. We've had such a strong seller's market like all through the COVID years, and I'm starting to see that slip some, and I think that's natural. The real estate market naturally goes up and down. Some of that could be seasonal. The spring is always hotter than the fall, but I really think we're just headed towards more of a balanced market, not like a super strong buyer's market, but just headed towards more of a balanced market, which at the end of the day, it's really good for everybody. Buyers aren't having to give away the farm to get the house, and sellers are getting what they need. Buyers are getting some concessions. More balanced is really good for everybody.
Yeah. And I think, I mean, correct me if I'm wrong, it feels like more inventory is building. So there's more inventory on the market, which is good. Like having choices is good, right? So as buyers start to come back into the market and things, you know, with rates coming down, houses are more affordable now. I think for there to be that inventory in the market and to be kind of back to a balanced market is just a healthier place to be.
Absolutely. Right now, sellers have been sort of medium motivated recently because a lot of sellers have a lot of equity, you know, so they don't have crazy high payments. They've got interest rates in, you know, 2s, 3s, 4%, so their rates are not terrible. Their payments are not bad. They've got a lot of equity. Like, yeah, I've got sellers that would like to move if they can get a great offer, but they don't have to move. It's not like they're about to lose their houses. So sellers have not been terribly motivated. And then with the rates being so high, buyers haven't been terribly motivated. It's like if they can find the perfect house in the perfect location, in the perfect condition, then they'll go ahead and do it. But with these rates coming down, I'm hoping that buyers are going to be a little bit more motivated just to go ahead and jump in, go ahead and get that house off the market. Because when real estate happens, so many industries get, you know, money pumped into them, like the lenders, the realtors, the appraisers, like moving industries, home improvement industries. There's just a lot tied to real estate. I feel like it's good for a lot of people when the real estate market is moving.
Yeah, real estate runs, I mean, it really kind of is a big engine in the economy. There's so many people involved, builders, you know, construction, all the things. Yeah.
Closing attorneys, there's a lot of people whose livelihood is depending on the real estate. So it's an industry that I think we got to keep moving. Maybe I'm biased.
Yeah.